All right, how's everybody doing today? Welcome to today's coaching call. All right, we're going to go over some different things today. We're going to be talking about evaluating deals and you understanding what it is a property is worth. Okay, because this is really the the major key, that it comes down to when you are offering, making your offer on properties. Okay, one thing I see a lot of people say they can't find buyers for their properties is because some investors are just not good at running comps and knowing exactly what to offer. All right, and being able to buy the property at a fair price, low enough, is going to be the key to you being able to wholesale it. Okay, so you got to know your numbers. You got to know, what a property is worth, what's the ARV, your maximum allowable offer, and I'm gonna go over some few other things as well too, because you got to know exactly how to position the offer, but also, again, what the price you need to offer. All right, excuse me. You're gonna have a lot of times, some sellers are not going to necessarily agree with your offer. All right, and that's going to happen. Okay, um, but I'm going to show you how to position when someone is motivated. All right, and how to after you run the numbers. Okay, you know exactly what the house is worth and everything. You know what the offer you need to make. How to position it. All right, so we're going to break this up to two parts. I don't want to give you too much, in one setting, because it's so much that sometimes people, it's too much information in one span. All right, so what we're gonna do is we're gonna break this into two parts. All right, we're gonna do the first part to today's coaching call, and then we'll finish up and wrap up on the second part. All right, now what I'm gonna do, I'm gonna get into the presentation, and then we're gonna go and run some comps together. Okay, I'm gonna show you how to run comps. As you see here is my screen of FreedomSoft. We've been having calls and leads coming in like daily. We just put another property under contract today. Um, it's been great. We've been really hustling and bustling, as well as training some new teammates that I've hired as well. All right, but um, I'm here to get you to the same level in your business. All right, I want you, for those of you that maybe you haven't closed your first deal, I want to show you how you can get that first deal closed, and also start to do multiple deals. Okay, guys, I started this business. Some of you are tuning in new. I know some of you have been tuning in for a while, so you already know this story. But before I get into it, I want to tell you a story for the ones that are on here brand new that don't know about my story. Okay, guys, I started this business in 2009. Okay, I got started in wholesaling, and it was around May. I believe May, when I first heard about wholesaling. I ended up picking up a course for $997 on my girl's credit card that I borrowed, and I went through it. It was about how to buy and sell bank foreclosure properties. Okay, REOs, that's what they call them, real estate owned properties. Okay, and I went through the course. We didn't have any coaching calls like this. I sure wish we did. But I went through the training, and it wasn't even a digital course. At that time, it was DVDs and workbooks. As a matter of fact, I still have the course to this day in a box. I have it in my closet. But anyways, I went through the course. I took massive action, and I made a lot of mistakes, guys. I made a lot of mistakes. I mean, I ended up putting 26 properties under contract, and none of them closed. And you know what? Me looking back on it today, honestly, majority of the properties that I put under contract, the reason why none of them sold was because I didn't know how to run the numbers. Okay? I had access to MLS. I had the tools that I needed. Okay? But what I was missing, all right, let me turn my phone off. What I was missing was actually knowing how to know what a property is worth in its value today. Okay, how to know and look at what properties are selling for cash, understanding the maximum allowable offer. All right, and so I was going out putting these properties under contract, close to list price or a little bit under list price, thinking that I would be able to sell the deal. Okay, it would be listed. It's funny, I look at it now because I think about it, like it's so stupid of me, but I was misinformed. I didn't really understand and know what I was doing. But I was getting properties that was listed for 40,000, and then I would go out and try to sell it for 50,000. Okay, who in the heck would pay more than what the property is listed for? Right? Stupid. Okay, But again, I was uneducated. All right, it was some things in the course. It was great, but there were some things that were missing. All right, and had I had a coaching calls like this, okay, or somebody is to reach out to, I probably wouldn't have put that many deals under contract and, messed up relationships with REO agents and just looking like a fool. All right. So the great thing about is today, you're going to learn how to get over these mistakes. This is why I do these coaching calls, because I don't want you to experience the same thing that I went through, because honestly, there was many a times I wanted to give up. I mean, 26 deals, guys. I've truly made, I don't say that as I'm just playing, 26 deals. All right. Most people give up after this first, one or two properties they don't close. All right. So I say that with, take these coaching calls and really, use them to your advantage. Okay. Write down some notes. I want you to get out your paper, jot down these notes. I'm going to get into it. After the presentation is done, I'm going to go ahead and answer any of your questions, all right? So make sure you hold your questions towards the end. And these are recorded, all right? So if you're coming in late, you're just jumping in now, or even if you miss a call, you can go back into the training, and we have it uploaded on the weekend. So that way you can go back over it, all right, and use it to your advantage, all right? So let me go ahead and pull up the presentation and get started, all right? I'm kind of getting over this little sore throat problem I'm having. Excuse me. All right, so let's go ahead and get into it real quick. Matter of fact, let me move this over. All right, there we go. All right, so evaluating deals and knowing what to offer. All right. So here's a house here that we sold. This is a house that we sold this month. Now you're looking at this property. You see there's all type of signs, there's some code violations and stuff and everything was on this property. If I showed you inside the house, you would be like, what the heck, who the heck would buy this house? It still needs work, all right? And so the question that you always ask is, a property like this that does need work, what is it worth? Okay, what is the property worth? All right, and we're going to talk about a few different things, all right, when it comes to evaluating properties, all right? Some of you might have came across properties like this or even worse, and you might have thought, who in the heck would buy a property like this? All right, but properties, whether they're fixed up and ready to go or they need a lot of work or just a little work, there's room for you to be able to make a profit, all right? Especially when they need work, all right? Don't run from properties that need work, all right? I know some people I've got some messages over the past couple of days that, they've had, came across properties that needed work and they were kind of nervous, all right? No, you want properties that need work, okay? Hold your questions toward the end. I promise I'm going to get to them, all right? And so, excuse me, there's a few different things when it comes to understanding what a property is worth. All right, you have the ARV, okay, which is your after repair value. I'll explain that a little bit more in detail for those of you that don't know. All right, some of you probably already know this, but the ones that don't worry, I'll explain it a little bit more. You have your as is value, okay, as is value, all right. You also have, of course, what the seller is probably asking or the list price or what they're looking to get for it, all right. And then you have your fixed up, okay, after the property is fixed up, all right, right, which is your ARV, okay? And you have your, what we call MAO, okay, your maximum allowable offer, all right? That's what you're willing to pay, okay, what you're willing to pay, all right? That's the numbers that you're going to need to, in this whole process, okay, when it comes to wholesaling, all right? What is the maximum allowable offer, okay? What is it that you could pay and still be able to make your profit, all right? Now, let's get into this, all right? Your ARV, okay, the comps, all right? This is, you know, the things that most investors end up missing or just don't really know about when running comps, okay? A lot of you, I know, you may have heard of the 70% rule, okay? Some of you like to find out the ARV, all right? Which a lot of times what you can do, guys, to find out the ARV is, well, you know, I'm going to get into it in a little bit. Let me not spoil it, but I'm going to get into it a little bit on how to really find the ARV of a property, okay? You have your as-is value, okay, which allows you to avoid running bad numbers, okay? Remember, I was looking at the list price, okay? When I was going after REO properties when I first started this business in 2009, I was looking at the list price and I was just trying to offer under the list price, all right? But that was leading to bad offers and no closed deals because I didn't know what the property was really worth as is, meaning whatever it is right now, no work done, what was it worth? All right, so you got to know that, okay? And when you understand these things, when you're able to tell the story, meaning you have good numbers, okay, which a lot of times you're going to find yourself educating the seller, all right? You got to understand, guys, a house is one of your most precious assets, okay? It's one of the most precious assets. So you got to think about the person, the seller, okay, that you're talking to on the other end. There, you know, there's a story behind the property. All right, just today, I put it on for those of you that follow me on social media, if you follow me on my Snapchat or my Instagram, I was on the phone with a seller today for 20 minutes. I posted it on my social media. I posted it on my Snapchat and my Instagram story. So if you go in there, follow me. My @name is Detroit Mogul. You'll be able to see. I was on the phone with the seller today for 20 minutes. 20 minutes of her just talking. She was just talking. She told me how sentimental this property was to her. You know, it was her dad's, or her, and it wasn't even her real, it was her father-in-law's property, which had won all type of awards and was noted as one of the, you know, best. He was in World War II, and he had all these, you know, accolades, and he so many things. And it got so emotional. This woman started crying to me on the phone. She was just listening. I probably was the only person that have talked to her in the past few weeks, right? She has a husband, but I probably was the only person because she told me everything, literally, all right? Everything, okay? So you got to understand that, guys, some people, they're going to have some emotional attachment to their property, all right? You know, they grew up in this house. They put a lot of work into it, okay? They raised kids in it, all right? You're going to have some people that have no emotional attachments whatsoever. They happen to just maybe bought the property as an investment, and they didn't know what they were doing. They had bad rental management, and, you know, as a landlord, they're ready to get out of it. Okay, you have some that inherited a property, right? Someone in the family passed, they lucked up, got a house now. They don't want the house. They don't care anything about the house. They look at it as a dollar sign. All right, but you have to know what that story is. Okay, you have to know what the situation is. If you go into it and you're just looking at numbers, okay, without the story, you're going to end up losing out on the deals, all right? So you got to be able to tell the story, know what the story is. You got to know your numbers. That's very important. And then we use the PAS method, okay? The PAS method, which is you got to position yourself, okay, and find out what the problem is. So position yourself as the problem solver, but find out what that problem is. You agitate the problem, okay, and you solve it, all right? And you do that with the right messaging. That is going to get you more deals closed, okay? That's going to get you more deals closed. All right, so good comps, all right? The ARV, again, is your after repair value, okay? What is the property sale for after fixed up? Okay, after it's fixed up, and this is looking at retail numbers, all right? So you can look at what properties are selling for in that area, okay, for retail, all right? You can find the ARV a lot of times if you take the comps of those retail numbers, right? And you, let's say you do the average of those, and whatever the average is, that can give you your after repair value, okay? So why do we need an accurate ARV? All right, this is establish the benchmark. Okay, this lets you know what it's going to be worth after the repairs are done. Okay, it takes you literally from speculation to actual data. Now here's the thing. When you're a wholesaler, I know you've heard ARV, 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 right? But here's the thing. Unless you really know repairs, all right, some people that are going to go into the house are going to do minimal repairs, and then some people are going to do astronomical repairs, okay? And this is why we teach the Mayo, okay, method, all right? Because at the end of the day, one investor might go into the property and put $20,000 worth of work and have it ready and resell it. The other ones, they might put it and put 40 into it and then sell it for top-notch dollar, all right? And those are for your houses that are in your A and B type neighborhoods, right? You might be investing in C neighborhoods or lower class C high D neighborhoods, okay? A and B neighborhoods are the, the areas where people are buying to live in them, all right? They're getting a loan, okay? Your C and D areas are more rental areas, okay? Those are people, the buyers are gonna come in, they're gonna buy it and hold it and rent it out. All right, so there's going to be less rehab work done on those because they just want to make sure they have a good enough living, livable experience for the renter to come in and they make their cash flow. All right, so accurate ARVs, guys, it is a must, especially when you're selling to a rehabber, a fix and flipper, but you don't necessarily need it when you're selling to a landlord buyer, all right? And they're just going to base that off of what type of area you're focusing in on, okay? Now, when it comes to picking up properties, all right, you got to understand, you need to always compare these things, okay? Some of you live, like for instance in Florida, there is no basement, so you don't have to worry about that. But you look at your beds, your baths, okay, if there's a basement, all right, or attic, okay, garage, all right, especially beds, baths, garage, all right. Some of you, basements doesn't count for you because they don't have that there. That's fine. But beds, baths, and if there's a garage, okay. For some of you that live in, tropical areas like Florida, pool, okay. You want to compare these things, okay, when you're running comps, all right. This is key. All right, moving along. You want to know the size, okay, the living square feet, all right? How much is the square feet, all right? You want to compare that. You can't compare a 3-bedroom, 2-bathroom, 1-car garage, 1,200 square feet to a 3-bed, 2-bath, 2-car garage, 2,500 square feet, all right? So try to get it as close as possible, guys, all right? The proximity, okay? You really don't want it no more than a 1.5-mile radius, okay? But what I've found is that in different cities, especially me doing virtual investing, what I found is that in some areas, you really want to try to drill in on the same neighborhood or subdivision. All right. So what we do is we'll go into the property appraiser site. We'll look under the legal description and try to find what the subdivision is and try to tailor that as close as we can, okay? And you can even go into a map, okay? We do this because we have access to MLS, but if you do not have access, you can easily just, You can look up legal description in your public records, of course. But what you can do is you can just look at the map and try to get as close as possible. All right. So if you can get it under, a half mile, same neighborhood, same blocks. The reason why I say this is because what we found is that some houses on the south side, same zip code, will sell for one price, but the property on the north side sells a little bit different. Same zip code. They're not too far away, but it's just different prices, okay? So you really want to drill in on that if you can. It's close on the same block, same area, okay? If you got this spread out, it's no problem, but doing no more than a mile and a half radius that you're comparing properties to, all right? Also, you want to look at the sold date, okay? Typically, 90 days, all right? Trends, market trends change, okay? Sometimes properties go up in value, sometimes they go down in value, all right? Go back no more than 6 months, all right? There's sometimes I'm running comps and I can't get anything in the past 3 months. So what I'll do, I go back and I look at 6 months, okay? I expanded from 3 months to 6 months. All right, you also want to look at the year built, okay? Listen, you don't compare a house that was built in 2005 to a house that was built in 1970, right? You just can't do it. I see some people that make comps and they come to me and I'm like, where'd you get that number from? And then they show me a house that they sold and I'm like, you forgot that these were built 20 years apart, okay? There's a difference, all right? So try to get them as close as possible to the year built as well, all right? Now, when it comes to your as-is value, all right, this is how you determine it, okay? It's your ARV minus the fix-up cost. All right, now each and every single one of the courses that I have, okay, whether you're in a virtual course or REI Wealth Mastermind or Academy, we have a repair sheet, okay? It gives you an estimate of what it costs to fix up certain things in the house, all right? You can use that to your advantage. Everybody is inside the training. You can download it. We even have it inside our Facebook group that you can download, all right? Because I know some of you might not, well, Chris, I don't know what it costs to fix up a kitchen or do this. We have all that in the repair estimate sheet, all right? So you can use that. This is going to give you your as-is value, okay? It's what the property is worth in its current condition, all right? I put addition. I meant to say condition. All right, you get to base it off actual data, okay? You get to base it off actual data, all right? And it gives you a chance to put in an actual value, all right? And you can pretty much compare it to distressed properties, all right? So what a lot of times what we'll do is we'll look at the properties that have sold in the area, and we'll also look at what other things did that property need, okay? Is it close to what our property is, all right? Because I'm not going to compare a house that's fixed up all the way that's sold for cash, and my house needs, new tile, new kitchen, a new bathroom. I can't compare that, okay? So it gives you that basis to really be able to calculate a good offer of what you're going to offer the seller, all right? So I'll give you an example, all right? You have two houses in the same neighborhood, okay? This has happened to me before, all right? So both of them, they could be the same beds and bath, right? Same 3-bedroom, same 2-bathroom, all right? Square feet, right on, 1,200 square feet, okay? Both of them, they're worth about $100,000 fixed up, all right? But here's the issue. One of the properties, okay, has been lived in, but there hasn't been any updates. And I want to talk about that real quick, all right? What's going to happen? All right, you're going to talk with sellers. You're going to ask them, hey, Mr. John Smith, let me know, tell me, is there any repairs needed on the property? All right, that's a question that you ask. And they're going to tell you, oh, no, it's good to go. It's ready, okay? But they haven't done any type of updates since they bought the property in 1987. All right? So even though there's not any repairs that are known to the eye that, they can physically see, there will be updating if they have not done anything, in the past few years that they bought it. Okay? They bought it in the 80s, 90s, and they haven't done anything. you know, definitely is going to need some updating. All right. Then you have property B, okay, that has been neglected and used. Okay. Same area, but this seller has, went in and, they haven't done anything. Okay. They've basically just let it go to pieces. Roof falling apart. All right. Uh, they just totally ran down the property. Totally ran it down. All right. I mean, the garage is falling apart. Okay. They could be a hoarder, which I've experienced this, guys. I bought and sold a house that was the worst house in the block. Very, very, very great neighborhood of Tampa. But this seller had neglected and used it. He literally turned it down to the bottom of the barrel of a property. All right, very, very embarrassing. Okay, so if you look at that, if there's two different ones lived in but not updated, okay, the other one's neglected and used. All right, maybe they even rented it out or whatever, and the person just trashed the place. Okay, the fix-up cost is going to be different. All right, so you look at the fix-up cost might be $20,000 for it to get updated and ready for the property A. However, property B, all right, they're going to need to put $50,000 worth in it. Okay, so if you look at the as-is value, guys, you minus 100,000, the cost 20,000, it gives you as-is value of 80,000. Okay, and then you look at the property B, of course, 100,000 minus 50,000, as-is value would be $50,000. All right, let me get a quick little water break. All right, and so I want to talk about being able to run comps. All right, now what you can do to be able to get comps and run comps, if you don't have access to MLS, which most of you probably will not have it, okay, it's a very, very good tool to, if you have a relationship with a realtor, that will give you an assistant login, but don't think it's going to come easy, okay? Maybe you might just need to, exchange value and get a realtor to send you comps, okay? But if not, there's other sites that you can use, like Redfin, okay? Redfin.com, all right? You can use that website, and you want to look at similar sales, okay? Similar recent sales, all right? I look at Redfin all the time, okay? Before I even log on to MLS, all right? Same thing with Zillow, okay? Don't necessarily look so much at the Zestimate, all right? They got a little bit better, so it's definitely a lot better than it was when I first got started. It used to be really, 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 really off, but they have gotten better over the past couple of years. But pay attention to the similar sales, okay? Look at the similar sales, all right? And for those of you that's trying to get ARVs and looking at the retail prices, look at what stuff is listed for and find out how many days it's been on the market. Okay, that's another thing. All right, when somebody is a rehabber, what they'll do to find out what they'll be able to sell it for, a lot of times what they'll do is they'll go on MLS and look at their neighborhood, look in that area to run comps and find out what property sold for retail and how many days it was on the market, because that's very key. Okay, if it's been on the market for 8 months and it finally sold for $300,000. But other properties are selling in 30 days for 220. You see there's a big difference. Okay, the person that's rehabbing it, they might be using hard money, they might be using private money, so they happen to pay a monthly fee to borrow that money. All right, so that cuts into their profits. So they're not going to hold out 8 months to get the highest and best offer. They want to be able to sell it quick, okay? So they're going to need to know their numbers based off of what those properties sold for retail and in a quick manner, okay? And, 30, 60 days, 90 days or so, okay? But you can use Zillow.com, again, to find recent sales in the area. Another good one, okay, is Find Comps Now. All right, findcompsnow.com. Okay, it'll tell you some cash transactions and sales. It also will tell you some retail ones as well. Yep, it'll tell you some retail as well. It even tells you, I think, some private money lenders in there as well. And it's free to use, okay? So you can use those 3 websites right there. And then, once you start to build a relationship up with a realtor, get them to send you comps, all right, cash comps. They can also send you retail comps. And, if you happen to get very, very close to one, or if you are a realtor, which I know some of you are a realtor and you're wholesaling as well, you have access to MLS and you could be able to pull those for yourself, okay? But you got to know the numbers, guys. This is very, very essential, all right, in order to make money, okay? You got to be able to know what properties are selling for and offer under, and also, have that room for you to be able to make money, okay? Because, if you don't run the numbers and you don't get the comps right, and you end up pricing it, where, which has happened before in the past, where I've priced it right at what somebody would pay for, and then you have to go back and try to negotiate with the seller, okay? And maybe that seller might not want to come down, and now you end up getting stuck with this property that you can't sell, and you end up having to back out of the contract. Now, great thing is that if you're using the contract inside the training, you can back out of it, but you've put your time into this deal. You don't want to do that, all right? So you're better off offering at the right price initially, okay? And even if the seller is hesitant on that offer, it's okay, versus just getting them to agree to the offer and getting a property that you won't be able to sell, okay? Because again, I told you that's what I used to go through, all right? Now, what we're going to talk about on the next one, we're going to cover your maximum allowable offer, okay, and how to really, really, really go into present the offer. There's a whole methodology to it, and we're going to really, really dive into that, okay? What I'm going to do is I'm going to go over a few different properties and stuff. We're going to run some comps together. What I'm going to do is I'm going to open it up. Any of you guys questions? And then also maybe we can run some comps together. All right, let's look at some stuff together. If you got a property you have under contract, or even if you're looking at, let's see if we can get some comps together. All right, you go ahead and send the property, or even if you have any questions, okay, just go ahead and put in the chat box. All right, and we'll go ahead and get to it. How you doing, Tracy? Glad to have you on the call tonight. Let me get a little drink of water. All right, go ahead. Feel free to put your questions in there, or if you have a property, definitely you can put in there. All right. Okay, so let's see. Okay, so how accurate is Find Comps now? I think Find Comps now is pretty decent. Okay, always, guys, MLS is going to be the most accurate. But Find Comps now gives you some recent sales. Okay, it's kind of like, I honestly, for me, what I've been using lately, for areas that I don't have MLS access, is Redfin. I really, 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 really love Redfin. Okay, and that'll give me some similar sales. But Find Comps now is pretty decent too. I think I saw somebody just came up with another one program, but I forgot the name of it. But when I do get it, I'll send it out to you guys. I did run a couple comps on there, and it actually worked pretty good too. So when I get that, I'll be able to send that to you. All right. All right. Good question. Good question. Okay. So when picking a virtual market, what range of cash transactions do you like to see before entering the market? All right. So my thing, I like to see, if I can see about 20 or more in a certain zip code of the area, for me, that looks good. So I would say if you want to look at a whole city, if you look at in 90 days of cash transactions, if you're into like 50, 40, 50 and over, I think that's a very good start. You'll have some of them, like for instance in Florida, where it's like 100, 200. which is real good. So, and as long as, I would say about 50 in the past 90 days, if not more, especially if you can get more. All right, if you start getting to only like 10, 15, or 20, it's kind of like, it's not really a very big market, cash market, okay? I was actually going on with a client the other day. We were looking at a house that he had, and I believe it was damn, what city was that in? Uh, I think it might have been Arkansas or Mississippi, one of those cities, states. I mean, and it was no cash transactions there. Like it was like we couldn't find anything, and he had this deal, but not being able to find any cash transactions in that market, I was like, if we can't find any cash buyers, and cash transactions, I'm like, it's just not a market you're going to be able to wholesale to. All right. All right. Keep the questions coming, guys. Keep the questions coming. All right. So, okay. So the Harris County Assessor has the house appraised at 52,000, owes 1,300 in taxes, but the seller wants no less than 65. How to negotiate a contract with the seller to lower his price? All right. Good question. So let me ask you this, Mark. On this deal, okay, what is the reason the seller is looking to sell? Is they just looking to, see what they can get, and they just like, I don't want anything lower than 65, or is there any type of motivation? Okay, so there's no really motivation. They're trying to see what they can get. All right, well, in that case, it's very hard to negotiate a deal like that, okay? Because the thing is that if there's really not no serious motivation, then it's very hard to get them to accept the offer. But this is what you can do, okay? So what I want you to do is I want you to position the offer and say, hey, look, I understand that you don't want anything less than $65,000, and since there's no really real reason you need to sell at this point, I don't want to offend you with my offer because it will be less than $65,000. And just say that. All right, listen, and then listen. Okay, and then if they say, yeah, all right, well, yeah, if it's not 65,000, I don't want it. All right, okay, no problem. Hang up. Okay, and move on. All right, now what I want you to do is when you move on, I want you to, and I'll go over this on another call, okay? What we do is even ones that we don't get accepted, we still send them the offer written with the contract, okay? We still, even the ones that we don't get accepted, we still send it to them, okay? All right, it doesn't necessarily work. Honestly, 99% of the time it doesn't work. But we've had one of our follow-ups from 3 months where we sent that contract offer back, and they called us back and said, was the offer still on the table? We put that deal in the contract, all right? So I want you to do that, okay? But if they do say, when you do let them know that, yeah, you're going to be paying less than $65,000, and they say, all right, well, what's your offer? Okay, then all you need to do is just say, look, based on the houses that are selling in the area, this is what we will be able to pay for it, okay? Does the house need repairs? Okay, because if it does, use that to your advantage. Hey, the house is going to need X amount of repairs to get it in its, a good condition for today's condition. Also, you owe some money in taxes as well, okay? Which you really don't have to use that for negotiation, but if there's work that needs to be done or updating, definitely use that to negotiate the deal down lower, okay? And just explain to them, hey, based off the houses what's selling for the area, I can't pay $65,000 for your property when properties in the area are selling for this. I will be overpaying for the property. And as you know, I'm an investor. This is how I make a living. I couldn't overpay for your property, all right? And anybody can understand that, all right? So that's how you want to position it, okay? All right, so, oh, great. You got a potential deal? Okay. I like that. I like to hear that. All right. good question, Ty. Making offers on the MLS. Here's the thing. Unless you have the $2,000 deposit, or you really have some buyers, that exactly what they're looking for, and you vetted them out to know that they're ready to go, and that they don't have any problem with buying properties on the MLS, as long as you get it at a certain price, then go for it. If not, stay away from it, because you gotta tie it up with a deposit, and it's not easy to get that deposit back once you send it in. All right, I got into trouble with that myself, and almost lost $1,000. All right, I had to go through hell to get that money back. I ended up getting it back, and I didn't even have it. My account would have went negative, definitely, if they would have tried to take that $1,000. So yeah, I would tell you, definitely, playing with the MLS is getting it for definitely a great price under what it's listed for, and having some good buyers that don't mind, buying properties off the MLS. All right. No, I haven't, Alex. I have not tested the Bay Area market. I did have a student back in the day that did do properties there. He flipped properties out there in Oakland. So definitely the price points. I guess they're probably a little bit higher now, because especially with Golden State winning. But yeah, I guess you would have to just check to see what the cash sales in that area are like. And it's up marketing. I will tell you, anybody that's on this call that's doing anything in California, put your marketing dollars in going after tax defaults. Okay, go after tax default leads. All right, tax default leads. All right, and yes, tax defaults. Okay, and I'm just gonna tell you where I'm getting my tax default leads. All right, I just signed up to this program here. All right, I'm gonna show you guys. All right, so this is the program that I just signed up to. Okay. Because we were looking to get some tax default leads. I usually get them from a friend of mine. Most of you guys know him, Eric Torrente. But we wanted to go and get into some different areas, and so we signed up for this service here, Real Flow. Okay, and it gives us the tax default leads for $49 a month. Okay, we get absentee owners, bankruptcy leads, all these different type of leads. It's pretty cool. Okay, they give you a website and everything. I don't use a website because I have my own website stuff, the Freedom Soft. But we use it, for tax lien leads. Okay, tax liens. Okay, so that's what we use it for, to get tax lien leads. And you can use it. It's free trial. You can try it out. Definitely works good. Okay. Okay, so I have a partnership with the private lender, $265,000 proof of funds and bank statements to get the property under contract for the. Oh, well, shoot! If you got the private lender already ready, you're good to go. That's what you need. If you got the funding, then that's good. Okay, you're good to go. Yeah, it's accurate. Yep, it's definitely accurate. All right, definitely accurate. What I do is I have my virtual assistant go in here. She pulls the leads. She runs them up through the county to make sure everything is coming back. Single family homes, the names and everything is accurate. And that's what we're using. Okay, so we just sent out a campaign today, tax lien leads. All right, but those are good. People that run into issues with taxes, it's definitely what you want to target. That and vacant properties. All right, those are going to be your gold mines, as well as probates. If you target those 3 lead sources the whole year, okay, you're going to make a lot of money, all right? And then what you'll do is you'll mix it in, and you'll drop in some free and clear absentee owners, or even some free and clear, 65 and older owner occupied, okay? But, everybody's mailing to those lists already, okay? So for those of you, in your competitive market, I know you might hear absentee owners, free and clear, and that's cool. But if you don't want to be mailing to people that are, getting 40 other letters and postcards, especially if your budget is small, start off mailing to somebody that has a higher probability of being a motivated seller, which is going to be a probate lead, a tax default lead, or a vacant property. All right. Um. Okay. Perfect. 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 Okay. Yes. All right. So, Constance says, can I explain the exit strategies on the assignment contracts? All right. Yeah. No problem. Okay. So basically, um, what the exit strategy is going to be wholesaling. All right. So what you're going to do is, when you get a property under contract, all right, you sign a purchase and sale contract with a seller, a private homeowner. Okay. When you go out and you market the property and you find a buyer, all right, what you're going to do is, the assignment contract is going to allow you to, let's say if you had the property, with a seller for $50,000, okay, and then you found a buyer that wanted to pay you $60,000, all right. The assignment contract is going to be a $10,000 assignment with a $2,000 deposit, okay, and you're going to use this assignment contract to assign the purchase and sale contract that you have with the buyer for $50,000 to that seller. With the seller to that buyer for $10,000, and that's your exit strategy. Is that you're just basically the middleman. You're saying, hey, I got this piece of paper that's worth $50,000, which holds this house. I'm gonna give it to you, but you got to pay me 10 grand for it. All right, that's all it is. You basically you're assigning a piece of paper which holds the contract to purchase the property, for a fee. All right, that's your exit strategy altogether. Right, and you can assign contracts. It's totally 100% legal. All right, you got to use a title company or a licensed attorney. Okay, make sure you deal with an investor-friendly title company that understands assignment contracts, and you can do these all day. Okay. Now, if you get into a property where maybe you don't want to show them how much you're making, all right, because listen, buyers don't care how much you're making, okay, majority of them. But, sometimes if, they see that you're making $20,000, $30,000 and they say, oh, I could have got this property a little bit cheaper, they might try to come and lowball you a little bit, all right? So what you can do is you can just do a double close, all right? You're basically going to take the funds from the B to C closing and close from the A to B closing. All right. The thing is, you're going to have to pay 2 closing costs. So you're going to have to pay closing costs on your side, which is going to come out your profit. All right. And then the buyer is going to pay the closing costs and then the close on it. All right. So you literally own the property for less than 5 minutes or an hour or whatever. Okay. And then the buyer will come in and buy it right back from you. And then they won't be able to see how much you're making on the deal. Okay. I do those on typically properties that I'm, getting $20,000, $30,000 assignments. All right, but now I have some private money lined up. I'm just going to close on them myself now. But you guys will get there. And for those of you that already have private money lined up, this is what you can do. Okay. All right. So we're towards the end of the call. All right. Do we have any other questions? Remember, guys, next coaching call we're going to do. We're going to talk, about the maximum allowable offer, and then we're going to also be talking about what to say to sellers. Okay. The probate process. Oh, I mean, it's the same. All right. Probate process is always the same. Pretty much everywhere generally. Okay. Definitely in California, I would definitely tell you to go after probate properties. Okay. Most definitely, you're probably gonna have to go across and get those information. But the process is always the same. All right. For those of you that don't understand or don't know what probate is, it is the process that where you're establishing the legal right of the will. Okay. Maybe the person that died did not establish who's going to get what assets, and that's why a probate attorney is needed to find out who's going to get what. All right. And if there's real estate inside of it, best believe you can position yourself as a buyer to purchase it. The reason why I love probates is because there's not a lot of emotional attachment when someone is just inheriting a property versus someone that actually bought it and done a lot of work and lived in it for years. All right. Caesar, I'm going to have it uploaded in the back office of the training. Okay. So this weekend, we'll have it uploaded inside the training. Just log into the course, whichever one you have, whether it's the Mastermind, the Virtual Blueprint Riches, or the Academy, and you can be able to get access to this training. All right. Okay. Do you need title insurance on the property for that 5 seconds that you own the property during a double closing? Yes, they do. Your title company will have give you property insurance. Yes, they'll put together everything, which will come out the closing cost, of course. So yeah, you're gonna have to generally, that's gonna be the cost that you're gonna come in. That's why I say the double closing, you're gonna incur some cost. Okay, you're definitely gonna accrue some cost, but hey, that's the part of doing business. So at $20,000, that you make, you might not make all of it. All right, because you end up paying the closing costs and everything. Okay. Alex, you got your first closing this Friday. Gross 25,000, net 19. Oh, congratulations, man! Congratulations, man. That's great, man. I'm glad you got your first deal under your belt. Way to start out 2017, man. Way to start out 2017. That's good. All right. Last one. Okay, so Gene says meet tomorrow with the guy I met. That his fiance has a house that was willed to her, and she wants to offer it her hands. She wants to offer her hands. She owes $3,500 in taxes. She has lived in it for 2 years. Redfin is, I guess, fine comps analysis is worth $276,121 depending on the repairs. I might be able to get it cheap. Would you do a double closing or? Well, this is the thing. I mean, on this property, the double closing is needed when the buyer is knowing how much you're going to make on it. Okay, the seller doesn't know how much you're going to make on a property. All right, they usually don't see that assignment contract. They go in, they sign the paperwork, they get the money that you agree to. All right, so they don't necessarily see that on their HUDs, but the buyer sees it on the HUD. So depending on what you want to do double close on or not, it's going to be dependent on if you want the buyers to know what you're making on it. If they don't really care. And again, depending on how much you're making on it, it doesn't really matter. You can assign it, but if you think that they might care, if you think it might, they might kind of lowball you a little bit lower, they definitely double close on it. Okay, so it just depends on the buyer. All right, guys, man, I appreciate you being on the call. I got to go put my little girl to bed. Because other than that, she's going to be on her iPad the rest of the night. So you guys have a great night, and I will see you on the next coaching call. Remember, you inside your Facebook group, you can ask me questions, and I will see you on the next coaching call. All right, everybody have a great night.